Welcome to the Capital News. I am your host, Alex Karitis. Thanks for joining me today. It is February 22nd, 2019. So let's get straight into some of the news in the stock market. S&P was up 18 points. The Dow was up 181. NASDAQ up 68. The Russell 2000, the small cap index, was up 14.5. What happened? Well, it's just another day. I think the markets just keep going up, up, and up. That's what our commander-in-chief, our president, Donald J. Trump, tweeted to us earlier in the week, that the markets were just going to go up, up, up. Despite having the negative news that we discussed here yesterday, not only in the U.S. but globally, the Dow was only down 100 points. Today, it made all of that up and then some. And it always rallies at the end of the day, which was the case here. It rallied yesterday off of its lows at the end of the day, and today it rallied higher in the last hour of trading. It's just what happens. It's almost every single day, so the randomness of it is sort of removed. So what's going on here? Is there somebody waiting at the end of the day? Is this the algorithms? Is this computer-driven trading that's taking place at the end of the day? What's going on here? But that's really where the meat and potatoes of the trading and where it moves at the end of the day. So it's something to keep an eye on. Now, in regards to oil, gold, and silver, those markets didn't move much today. The 10-year Treasury bond was down to 2.66%. So that's interesting. So obviously we have the 10-year bond yield decreasing, so that means there was some buying going on in the bond market. So again, is this a decoupling of assets, meaning stocks and bonds? Because you'll usually see them go in opposite directions. But there was a bid to bid both of these assets up because stocks are deemed to be the risky asset and bonds are deemed to be the safe asset. So what's going on here? And then there wasn't any big move in gold, if gold is to be seen as a safe play of some sort, an insurance policy, an inflation hedge, whatever you want to call it with gold. So what's going on here? This is just more shenanigans in this market that is in the land of Oz. So, of course, there was some news with U.S.-China trade talks. Let me read to you an article. This is just from Yahoo Finance. It's a pretty decent article. It's a good summary of what's going on in the fact that these negotiations are going to continue through this weekend in Washington, D.C. So here's the article. President Trump says there's a good chance the United States strikes a trade deal with China, and he and President Xi could meet sometime next month. Quote, I would say it's probably more likely that a deal does happen, but that doesn't mean it's going to happen, said President Trump. After 2 days of high-level negotiations, President Trump met with China's top negotiator in the Oval Office on Friday afternoon. The administration announced the Chinese delegation will stay in Washington through the weekend to continue negotiations. Quote, we have a one-time shot at making a great deal for both countries, President Trump said. Treasury Secretary Steve Mnuchin suggested President Trump could meet with President Xi sometime in March, if negotiations go well over the next few days. President Trump also told reporters if there is enough progress, he could extend the March 1st deadline when tariffs are set to rise from 10 to 25%. The president said, I don't think it would have to be a long-term extension. This week, the two countries have been working on multiple memorandums of understanding, addressing issues including intellectual property, technology transfer, currencies, and agriculture. Mnuchin told reporters the two countries have come to an agreement on currency issues. China has also agreed to buy more U.S. agricultural products. President Trump told reporters it will be the biggest farm deal ever made. Well, of course it was going to be the biggest farm deal ever made. It wasn't going to be the smallest. It's going to be the biggest and the best. So that's no surprise. The article continues. Craig Allen, president of the U.S.-China Business Council, told Yahoo Finance negotiators need to focus on issues like intellectual property, state-owned enterprises, and cybersecurity. We think that obviously the trade deficit is an important issue, but really, The more important issue is the structural impediments within the Chinese economy that systemically disadvantage foreign competitors. And I would rush to add not only foreign competitors, but private sector Chinese competitors, said Allen. United States Trade Representative Robert Lighthizer said while progress has been made on structural issues, quote, very big hurdles remain. Commerce Secretary Wilbur Ross said he's encouraged by this week's negotiations, but it's a little early for the champagne. In the Oval Office, President Trump reiterated that he and President Xi will be the ones to hammer out the final details of a deal. William Reich, a former trade official and current senior advisor at Center for Strategic and International Studies, told Yahoo Finance that gives Chinese negotiators incentive to hold back some of their concessions until the two leaders meet. He continues, I suspect their main goal is defensive. Get through this by giving up as little as possible. Negotiators aren't tasked with finishing an agreement, they're tasked with getting as close as they can. Lighthizer said negotiators will continue work in Washington all day Saturday and Sunday. So the trade talks continue, which is no surprise. It seems as if we are going to get to some deal. We are going to get the biggest, best farm deal ever made. We'll see what that translates into. Soybeans, wheat, is it everything? Is it just, we're going to find out, obviously, at some point. Is there going to be an extension? Probably, because President Trump has a busy week next week meeting with Chairman Kim Jong-un of North Korea in Vietnam. So for him to juggle everything, I don't think he wants these other stories to trump that. I think he wants to make that the news of next week and probably for a few days thereafter. Talk about their meeting. Talk about the progress that is being made between the United States and North Korea. Is there a path to peace? Is Kim Jong-un making good on whatever discussions they've had since their first meeting in Singapore from spring of last year? So there's going to be a lot of discussion on that. Then don't forget, we also have the Bob Mueller investigation that is supposedly winding down. Now, there was a story out yesterday that said that that report was going to be coming out next week. We are then told today that that is not true, that the report from Bob Mueller will not be coming out next week. Again, I am not surprised by this because President Trump has a big meeting with Kim Jong-un. So those stories weren't going to be intertwined. There's just too much news. They got to focus on something. So one thing at a time in this cynical news mainstream media that we have, in the news cycle that we have. It's one thing at a time. So we're going to get the meeting next week in Vietnam between President Trump, Kim Jong-un. Then we'll see if we have Bob Mueller's report or if we have the U.S. trade talks finally unwinding, and then we might have a meeting with President Trump and President Xi of China to hammer out the final deals, the final details of the deal, I should say. So it's all exciting. It all continues. This is the soap opera that we live in. Is this the final leg of this stock market? What is going to happen? How much further can it go? What does up, up, up mean? If and when a deal is struck with the Chinese, how much further can this market move? It is hitting technical levels that have served as points of strong resistance, meaning when they hit these technical levels, there is a retreat. There is a correction of some sort. The size I'm not going to speak to because I just don't know what will happen. I wouldn't be surprised if it blows through these resistance levels because there may actually be a deal. Now, I have been saying previously that it could be buy the rumor, sell the fact. If that happens, I wouldn't be surprised. And again, I wouldn't be surprised if it blows through it. So I don't mean to be wishy-washy, but this is the market that we live in. You just have to decouple yourself from all logical thinking. If there was logical thinking that was actually moving these markets, we would have been down several hundred points yesterday. We had the Philly Fed index down significantly. In January, it stood at 17. Economists were expecting 14. The reading was negative 4.1. Negative 4.1. The Manufacturing Purchasing Managers Index was down 1.2 points. Yes, it was still above 50, which still does mean that there is an expansion in the manufacturing sector, but it was down. We had U.S. existing home sales down for a third straight month. We had the Atlanta Fed decrease their GDP forecast that ended up being cut in half from where it was earlier in the year. That was not good news. You have bad numbers in Germany. You have bad numbers in Australia. You have bad numbers out of Japan. You've had bad numbers out of China. You have Italy in a technical recession. You have Germany that just dodged a technical recession. You have the Yellow Vests riots and protests that have continued for 14 straight weekends in France. You have the Brexit mess that is continuing. So we have nothing but uncertainty. And then the news that we do get is negative. And these markets just keep going up. Now, if you can solve that riddle, you're smarter than me. And I'm not here to claim that I'm the smartest man in the world, because I'm not. But this is just craziness. Now, we know that the Federal Reserve has done a 180 on policy. They are now in a wait and see. Will they put the pedal to the metal and start printing money again? Will they lower interest rates? What are they going to do? It seems plausible because we're having negative news and data come out. So this is their wait and see approach. This is their data dependent model now that they are supposedly on. Well, if this economic data continues to be a slow drip of negativity, well, then they're probably going to be more inclined to cut rates or to stop selling the assets off of their balance sheet. Because don't forget, a lot of their assets on their balance sheet are made up of U.S. Treasuries. They were buying U.S. Treasuries from Uncle Sam. That's the debt monetization. That's the default on the debt. That's really what that is, ladies and gentlemen. When a government central bank has to print money to buy its own debt, that's a default. That's a default because nobody else was going to buy it at those low interest rates. That's what this whole game was. But again, I've told you many times over, this has happened, and this is happening all over the world. So everybody's playing the same game. Who could care less, right? That's what it comes down to. So one of the biggest issues in my mind from that list that we went over from Deutsche Bank, the 30 market risks of 2019, what gives me the most pause when I go through that list and look at them? There's a lot of things on that list, a lot of things that were warranted and should have been on that list. And there are probably some other things that could have been added to that list. But I think the most important points on that list have to deal with central banks, particularly the Federal Reserve and the European Central Bank, the ECB. If they choose to reverse their course, and instead of being on a path of monetary tightening, they do a reverse, and it is not just wait and see, but it is a continuation of quantitative easing. And that quantitative easing, that supposed monetary stimulus has no effect on propping up stock markets and stimulating these underlying economies. That's the biggest risk, because then it's game over, because that's your last bet. If these people, these are supposed to be the lenders of last resort. That's what they're called, the lenders of last resort. In a crisis situation, when all else fails, no business wants to transact with other businesses, the government doesn't have enough in its tax base and its treasury to spend this money out in the economy, you go to the money printers. And they print money and they throw it out in the economy, and hopefully people take it and they spend and invest with it. And then you can start to transact again. You can start to get economic growth again. That's the theory. That was the practice. That was the hope. That was the reflation that we have been witnessing. That is the inflation in financial assets and everything else under the sun that has been taking place. Don't believe them when they tell you inflation is only 1.6, 1.8%. You go shopping, you know damn well that it isn't 1.6%, 1.8%. You wish it was only 1.8%, that your cost of living only went up. So don't believe them on that. So that becomes the biggest risk. They have tools in their arsenal. Money printing is pretty much it at this point. That's pretty much it. It had a stimulative effect over these last 10 years. Now, it primarily went to the wealthy and those who own financial assets, and we've had that conversation many times over. But now, if what I have been saying comes true, and diminishing marginal returns comes to fruition with all of this money printing, it's game over. And I don't know how else to put it. It is game over because there's no other tool in the tool bag. There just isn't. There's nothing else you can do. You can print more money. You can try to print even more money. I mean, this goes to that helicopter money, if you're familiar with the term, and that sort of started to come out when Chairman Ben Bernanke was the chairman of the Federal Reserve. Helicopter Ben, people called him. Is he literally going to go in a helicopter and throw money out of the helicopter into the street for people to get? Because that's how much money printing is going to take place. Is that what's going to happen? That would be insanity. Insanity. But you ask yourself, I mean, this is what these people have been doing for a decade. Printing money. Lowering interest rates. Buying up their own debt. And depending on the central bank, some of them even get into the equity markets. So is that going to happen? Is the Federal Reserve somehow, some way going to end up buying U.S. equities? No, I don't think they're allowed to do that legally. But, I mean, hell, I don't think they should be in existence to begin with. I think they break the law all the time. There's no checks and balances. There's nothing. Nobody overrules them and says you can't do this. So if they went into the market and they actually started buying equities, who's going to stop them? And by the time they get stopped, has stock prices already went up? Have they collapsed? What's happening here? What's happening here? Where's the leadership? Where is the real dialogue? We have a president in the White House and his economic advisors coming out and telling us this is the best economy ever. Ever. Not even close. Then you have the data that starts to come out, and it's not good. It's bankruptcies. It's Payless Shoe Source closing 2,500 stores. It's Sears going bankrupt. It's retail sales dropping 1.2% when we were told that we had a blockbuster holiday shopping season. Well, that wasn't true, was it? Then you had the temporary government shutdown, and you had a whole bunch of data that has been delayed. Some of it has come out, some of that we discussed yesterday and previously. Some of it is yet to come out. We're still waiting on GDP figures. Fourth quarter GDP is supposed to come out next week. What do we think is going to happen there? What's that going to look like? Is it going to be in line with these retail numbers? Is it going to be in line with what President Trump and his advisors say? What's going to be the case? We have no idea. We have no idea whatsoever. But this all goes to this greater narrative of this stock market. And it isn't just the U.S. stock market, but that's the market we obviously primarily focus on in this show. It just keeps going up. And I have to scratch my head. I mean, yesterday it made sense. There was a drop-off, but it was only 100 points on the Dow. If it was 200 points, 500 points, I would not have been surprised because of the economic news that came out. But it was only 100 points, and it rallied at the end of the day to get to 100 points. And today, we got all of it back and then some, up 180 points today on the Dow. What's it going to do Monday? Because we know from the Yahoo Finance article that the Chinese are staying the weekend, and it's going to be a huge slumber party, and we're going to make huge deals. So that could be another news story for all of next week, that we're going to make a deal, and it's solidified. We already know that we're going to extend because the President and President Xi are going to meet in March. So everything's fine. This is just hammering out the finer details. So there's no reason to get in a panic, no reason to get in a tizzy. We'll just keep the tariffs on at 10%, no reason to increase them to 25%. Everybody remain calm, a deal is coming, and the markets might rally several hundred points. Who the hell knows? It could make new highs We're not that far away from making new highs. Despite being down 20% on Christmas, we are now up right back where we were, which is just crazy. It's just crazy. And if we continue on this trajectory for a couple more weeks, I wouldn't be surprised if we make new highs. I just wouldn't be. Now, I want to get into something real interesting here, and I'm just stating this for the record. This is completely speculative in nature. This is just something that I have seen on the news the other day. I was watching Bloomberg, and there was breaking news that Australia, which has a ton of natural resources, and two of their biggest national exports are iron ore and coal. And you can guess where it goes. Most of that goes to China. Well, this year, coal actually overtook iron ore as their largest export. Well, the breaking news out of Bloomberg was that in regards to a coal shipment, the Chinese were not accepting it. Okay, the Chinese were not accepting this coal shipment from Australia. So you can imagine what happened with the Australian currency, which goes by the Aussie. It almost, I don't want to use the word collapse, but it definitely sold off. Now, of course, the Australian authorities came out and said, no, everything's fine. There's no major issues here. We're still getting along with China, yada, 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 trying to allay the fears of what's going on here, because not only were the Chinese not accepting this coal, but now they were saying we're going to impose quotas on the amount of coal that we will accept from Australia. Now, I've spoken many times on this podcast that I believe Australia is in a housing bubble and is going to have some serious problems of their own because of this economic slowdown and because of all of the malinvestment that has taken place with all of these governments and fiscal policy and central banks with monetary policy. So my speculation on this is the following. And let me know your thoughts on this. I would not be surprised if this has to do with the U.S.-China trade talks. Where am I going with this? I am saying that President Trump is trying to make good on a promise that he made to all of those coal miners, especially those coal miners out of West Virginia, that they're going to get back into those mines to mine coal. You get what I'm saying here? The Chinese stopped the Australian coal shipment and said they were imposing quotas on Australian coal. Well, the Chinese need that coal. I mean, you need energy. You need power. And if you have a coal-powered energy plant, that's what you need. So there's no ifs, ands, or buts about it. You need it. So where's it going to come from? Well, hey, maybe, a lot of our coal-powered plants are shutting down, or they're virtually non-existent in the U.S., which is why, West Virginia in particular is just a devastated state, unfortunately, because they were really a one-trick pony as far as their economy was concerned. But this might, and again, this is all speculation, but the president may be negotiating some sort of surprise coal deal with China to buy a certain amount of coal from the United States so that he can make good to those voters out of West Virginia particularly. And then the United States can continue its trend of becoming a major exporter of energy, whether that's natural gas, oil, and now potentially coal. So I think that's really interesting. And then you have the politics of all of it. You would have Senator Joe Manchin out of West Virginia, who would now basically be owned lock, stock, and barrel by President Trump. I mean, if President Trump can make good on this, you basically have another Republican in the Senate. Because whatever President Trump is going to want, it's going to be very difficult for Senator Manchin, who is a Democrat, out of the state of West Virginia to vote against him on almost anything. It would just be bad politics for Joe Manchin. The only thing that would save him is the fact that he just won re-election, so he has 6 years. But this would be just a huge win for Donald Trump politically for the state of West Virginia because he would be making good on that promise. Again, all speculation, but it's very interesting. It's very interesting. Now, some other things came to light that one of the reasons why the Chinese were not accepting this coal had to do with the Huawei story and the fact that the Australians were siding with the U.S. and Canada and Western nations on saying, we're not going to adopt Huawei technologies and this, that, and the other. We're going to put those on hold. So this may have been some retaliation by the Chinese in that regard, which may very well be true. But I wouldn't be surprised if the Huawei and the ZTE cases out of China are also part of the negotiations that Donald Trump may partake in, either over this weekend or specifically with President Xi if and when they meet to finalize a deal. So there's a lot going on. That was speculation, but it would be very interesting if that's the case, because President Trump, he's putting America first. That's his story. That's his theme. And my goodness, despite the fact that Australia is a big ally, he's saying basically, screw you guys. I have coal miners that I got to take care of. You do what you got to do. I just did what I had to do. We'll see if that happens. Enjoy your weekend, everybody. It's been a pleasure having you. Please like, share, subscribe, get the word out. Let's make this channel grow. Please leave your comments. I'd love to hear from you, and we'll make it more interactive. This is the Capital News. I am Alex Kreitis. Godspeed.